Hi everyone, this is Bag of Don at StockMarketCaddy.com. First, thanks for tuning in. If you've seen our 2-minute introduction previously, feel free to advance to the 2-minute mark and commence your viewing of either the weekly video report for the investor class or, in addition to, the morning video report for the active trader class. Both videos utilize what we call our Swing Machine, a proprietary objective system that analyzes and provides us our trading information on the markets. We also provide the most active stocks that we will be looking at for the coming week. Here at StockMarketCaddy.com, we are about improving investment outcomes by empowering individuals to manage and trade one's personal portfolio for profit and enjoyment through education, innovation, and inspiration. Much like the movie in Bag of Ants, time to open your mind, loosen your grip a smidge, time to choose, play your game, now is the time. Feel free to follow us. We are not a financial advisor. We are not a financial broker. We are not making a recommendation to buy or sell anything. We are not interested in managing your money. We are interested in opening your horizons to show you how we go about managing and trading the markets each and every day. Our subscribers get, for just $29 a month, they receive a weekly video view of all the key markets every Sunday evening utilizing our Swing Machine. The active trader, in addition, receives a daily morning video view of all the key markets and the most active stocks that we will be looking at. Both the Sunday night video for the investor and the daily video is included at $29 a month. Let's get started. Good morning, everyone. This is Bag of Don, Stock Market Caddy. It's March 2nd at about 7:35, and the futures markets are open. We'll take a look at the ETFs as well this morning. Yesterday turned out to be a strong day. Once again, though, the weekly view has not changed. It won't change. It takes at least a week to change it, and although it can change midweek, but it is still in a bearish mode. So this move on a daily is a counter trend move. And I just remind everyone, if we're focused on the indices, for those that are focused on the indices, if you don't want to go, long, don't go. Just sit it out. If you do take a counter trend on an hourly basis or try to do any kind of scalping, understand that that you're actually making if you're trying to short when the markets are in a long on a daily, you're actually counter trending the counter trend, and you've got to be very, very disciplined, and you got to be sure to cut them off because you don't want to get caught up in a wave, which is what took place yesterday. But let's just take a look at what we see. First thing is the VIX itself is an issue on a daily basis. The VIX is a contrarian indicator. Or a counter indicator, in that when the VIX is short, the market has a tendency to be bullish. So we're seeing the VIX on a daily basis on a short mode. On a weekly, it's green, it's long, but on a daily basis, it's short, and the GPS is short. The markets themselves, the indices, they're long. You can see the number of days they've been long. The Nasdaq, the most recent 2 days. Long, mixed right now overnight, and then I just want to bring your eye down here to the bonds. The bonds also didn't help out the bears yesterday. The bonds continue to sell off a little bit. They moved into chop here this morning, but they were solidly in a short mode yesterday. We're selling off, and we're contributing to the rise in the indices. And in oil as well, oil was strong yesterday. That also helped the bulls, but it is moving into chop this morning. So I want to bring your eye, I'm going to scroll over here for a minute before I scroll down. On the indices themselves, you want to pay particular attention to we're just getting a little alert up here. We'll turn that off. The first cut and the second cut. So we still have some on a daily basis. These are the resistance markers. You want to be familiar with it, with whatever market or markets you're looking at, where you are in the field. Right now we're still in the midpoint on a daily basis, so they could still go higher on a daily. But let me I want to show you something. We're going to jump to a weekly view, and I'm going to scroll this over. Take a look at this. This is this is the same markets weekly. You can see they're short, but you can see here on a weekly basis they're moving into, the TF is moving into the first rough cut. So once again, on a weekly basis, please make note of what the first cut is in resistance and the second cut. So we are moving into a into the resistance area on a daily. I'm going to come back, and you can just slow down the video and make note on those numbers. I'm going to slide this back, and I just want to scroll down slowly so everyone can see all these markets in the markets that interest them. And let's take a look. Let's pause and take a look at the ETFs. Okay, and this is a daily view of the ETFs, and you can see here once again the VIX, the short entry being a contrarian or contrary indicator, is not helping if you are bearish the indices. And you can see here the SPYs have been long for 8 days, IWM for 3, the diamonds for 6, and the QQQs just went long yesterday, being confirmed by the GPS. Right now overnight mixed. We'll scroll over. You can get your this is interesting. We have moved into, on the ETFs, we are in the second cut, so we are definitely moving into some resistance area. Let's see if we can get a pullback that could be scalpable. If there is such a word, it would be a counter trend move. You want to stay small, nimble, hit and go until we will see this turn. We'll have plenty of time to get short the market. We'll send out a blast, but it would just be, probably a pullback. And the one beautiful thing about the radar, this is just an objective view. We're not going to comment about the fundamentals. It is what it is, and here are all the sectors. And this was also a problem. We got a long entry on the XLF yesterday, so we're long one day, not being confirmed by the GPS. We're not short the financials though, but that is a problem for right now, near term. And you can see just about all the sectors long, and we'll scroll down so that you can see them. This also, the junk, one of our subscribers mentioned, these high risk bonds, when they're bullish, it has a tendency to indicate, a risk on, whether or not it's for real or not. It's still bearish short on a weekly basis, but on a daily basis it's been long for 2 days, so they're still putting the risk on for now. The oil is just moved into chop. She never did get long. Gold had been long for some 38 days. She moved into chop. Could be an opportunity to get long. And we'll scroll down and let you see your favorite ETF. I do it kind of fast, but you guys can hold the video. I'll slide this over, and what you want to look for is, particularly when anything's in the second cut, you're looking for a reversion to mean, or in the second cut low, certainly you're looking potentially to get long or to cover a short trade. We'll Scroll up. And I want to give everyone a chance to see. We'll scroll the most volatile. These are the least expensive stocks, which are the most volatile. Anything with a volatility score over 50 would be a good tradable stock. Apply your disciplines. And we'll keep you posted on any trades that we enter. We're going to kind of keep our powder dry this morning and let the market come to us, and let's just see what we have. We trade both stocks and futures. We wish everyone the best.